Testing, testing. All right, guys, good afternoon. My name is Carlos Garcia, founder and CEO of G.A.R Capital. I know I did this a little earlier than usual. It is 4:15, 4:17 this afternoon. I usually do at 5, but my wife got me and the family tickets to go see Spider-Man Far From Home, No Way Home, or Some Home. I'm not sure what it is. I won't give you spoilers when I see it, so don't worry. To be honest with you, I haven't really kept up with Marvel for the most part, or movies in general. But I did see the Spider-Verse with Miles Morales. I thought that was great. So maybe this movie is fun. Who knows? So that's why I couldn't do it today at 5. The movie starts at around 5:30, so I wouldn't make it to the theater. So I apologize for that. But again, you can always replay this whenever you want. Back again. Aftermarket recap today on G.A.R Capital's YouTube channel. Before we begin, please click the like button. Mash that like button. Really do appreciate it. As always, your support of this channel is very beneficial. Really, thank you so much. Let's talk about today's market, if you want to call it, like crazy roller coaster ride. We'll go over it together. The Dow lost 29 points today. The Nasdaq got absolutely clubbed today, down 2.47%. We'll go over that here in a second. S&P down 0.87%. Not exactly awful if you think of it in the broader sense, but it felt like a cake in the nuts every second, right? The VIX, modestly up 6.64%. Not panic. It's at 2057. Again, panic would be like a 50, but it's at 2057. Remember that 20 level is what I always talk about. Let's take a look at small caps. They were clubbed like a baby seal today, down 2.02%. Wow. The dollar got slammed, down 0.54%, 95.98. Bonds were bidded, so that means yields slid. 1.422 on the U.S. 10-year. Gold actually bid today. Gold ended the day on the future side at $17.99. Right below that 1800 level, right? Up 1.5%, nearly 2%, excuse me. Silver futures up 4.36%. I still own some silver coins and little bars in my safe. I'm not gonna sell them or anything, but I guess I am a silver holder. Let's take a look at some credit. High yield credit down about 0.07%. Investment grade bonds pretty much flat. So again, not a sell-off in terms of bonds. Credit market's still relatively healthy. Crude oil up 1.5% at 71.72 a barrel. We'll go over here the sectors in a second. Let's see, Ethereum down about 1% on the future side, 4,022. Bitcoin still kind of hovering that 48 to 50,000 range in the futures, down about 2.5%. And gasoline futures went up about 4 cents at 2.16 a gallon, up 1.89%. Okay, let's break it down. Elephant out of the room. Let's go over the groups today, what hit and what didn't do well. So we know technology is a big part of the S&P, as we know. Really, 5 stocks have accounted for, I think, like 30 or 40% of the gains in the S&P. That's what happens when it's not equally weighted. Technology down 3.16%. Consumer cyclicals down 2.19%. And communication services down 1%. That's basically FANG, in a sense. Facebook, Apple, Amazon, I don't think we're going to count Netflix anymore, Google. You can probably put FAT AG, how about that? Take away Netflix at Tesla, because that was down. Industrial's pretty flat, down 0.3, real estate flat. Here's the green today, basic materials up 1.3%, so not exactly a panic. Financials up 0.86%, energy up 0.66%, utilities 0.33%, consumer defensive up 0.25 point. So in the 1 week relative performance from last Thursday to this Thursday, consumer defensives up 3.42%, utilities up 2.48%, and healthcare up 2.18%. Basic materials up 1%, financials catching a bit, up 0.6%, real estate 0.43%. The ones that got really smoked were really the leaders in the clubhouse. Again, consumer cyclicals have done well this year. Technology has done great this year. Communication services has done well this year. They're all down. Energy has been on fire this year, down 1.88% this week. Industrials down 1.35%. So imagine that. Take a look at that and exactly the relative performance. If you want to just take a look at the full year performance, you can see energy, technology, financial, real estate, communication services, all leaders in the clubhouse, right? And the ones that are done well recently have been defensive, utilities, healthcare. And they're in the bottom 3 or 4. Cyclicals down, only gained 4% year over year. But a year-to-date relative performance, energy, real estate, technology, financials, communication services, all sectors are green. Obviously, we are up for the year in terms of the S&P. So let's take a look at this really ugly map. How about, you're going to see a lot of red on your top left. Microsoft took a hit. Apple took a hit. Adobe took a hit. Nvidia took a hit. Broadcom, Qualcomm, AMD, CRM, name it, other than Intel, which I don't really like that company, they were up. Cisco was up. Google was down, and it's a pretty safe company in a sense. Facebook down 2%. Twitter down 2%. Amazon down 2.5%. Tesla down 5%. Home Depot, I own that, down 2%. Lowe's down 1.67%. But what was green? Financials were green, except for PayPal. Healthcare, all healthcare was on fire today, except for a couple of diagnostic and research companies. But again, most of the drug manufacturers did well. I guess I'm assuming with the demand for COVID vaccines and such. Pfizer, J&J, Eli Lilly, Bristol Myers, Gilead, Merck, Amgen, and AbbVie all did well. UNH finally taking a breather, down 0.31% today. Berkshire Hathaway continuing to do well, up 1.9%. FedEx did report earnings today. Let me see if I have FedEx. I think they are down after hours about 1%. UPS is up 1%. Currently, Costco taking a hit. Really no idea why. That's been a pretty solid company. They had great earnings, 2.27%. Walmart took a hit today. Target down 5%. Wow. Netflix down 2%. Disney down again. But look at this. AT&T has been an absolute disaster this year. They were up 7%. Imagine that. So that's where we got. Let's go over the play-by-play for the day. So let's go ahead and take a look at E-mini futures. This is the S&P futures. I can give you the exact breakdown like it's in the back of my head. I woke up this morning at 6 in the morning thinking all-time highs, let's rock, we're going to continue this. 6 o'clock, we tapped all-time highs right at 6 a.m. See that? I was up by 6 a.m. 47.43, I even tweeted all-time highs in the S&P 500. Futures, looks like we're going to spot to all-time highs. And then the sell orders came in right at 9:30, and it was just blocks and blocks with a 10 a.m. bounce, blocks and blocks, with a 1 p.m. bounce, a big sell right at 2 o'clock, and then we ended up 3 and 4 o'clock right now. Enough to make your head scratch, really. So we tapped the settlement candle right at 50% retracement of yesterday's Fed move. So again, I did it from top to bottom, from the top of the candle right at 4 p.m. closing candle to the bottom here right at 2 when the Fed actually announced they weren't gonna increase rates this time, and Powell's presser. So you're talking about at the lows 46.02, at the highs 47.02, 100 handles, pretty simple, right? Then we had the whole move overnight. So you're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, 10 hours in between the open and close overnight. Then those 10 hours, those 10 candles, one was red. And again, right at 6 in the morning, we were at all-time highs. Right at 7 in the morning hits, it started coming down. So we sliced through the 100. We sliced through the 50. Now we bounced, and now we're kind of get back to the 50. Back and forth. So again, difficult to trade the tape, mind you. So you're probably thinking to yourself, Carlos, is this a time to short? The risk reward is not there. It just isn't there. The best bet would probably be to try to get under it in terms of trading to the upside. When you're on the upside, the best bet is to trade like it's gonna slip for the most part. The key here, and I did see this, was Nasdaq futures. That resistance right there at 16,454, 456, again, rejected. That's once, well, kind of close, twice, 3 times, like a triple top. And it's been just an absolute mess. Last Friday, we had a big pop and then a big drop. So again, let's kind of look at it in terms of the view. Friday, we had a big pop, right? End of the week. Monday, down. Tuesday, down. I thought we would get Tuesday's move, which was down pretty big, and where we tapped, I think, 4,600 in the S&P. I thought we would have gotten that on Wednesday. But yet Wednesday was bullish. It was a green short squeeze. Today, I thought we'd be bullish with tomorrow being red. What happened? Today was massively red. Let's see what tomorrow brings. Maybe the kind of inverse thinking in a sense that, oh, FOMC is going to be bearish, OPEX is going to be bearish, is kind of flipped on its head in a sense where, oh my God, maybe white is black and black is white in a sense. Very, very confusing to see. Let's take a look at some notable names that were down today. Upstart down 8%, Mara, Riot, Airbnb, Nvidia, DraftKings, SoFi, Blink, AMD, Football, Tesla, Square, Under Armour, Coinbase, Penn, National Gaming, Apple, Snap, Clove, Space, Pins, Microsoft, Palantir, GME, Amazon, Boeing, Neo, Netflix, Costco, Home Depot, Facebook, Alibaba, BlackBerry, CGC Canopy Growth, PayPal, XOP, which is the energy miners or the energy explorers, AMC, Zoom, Moderna, United Health, all red. What was green today? Roku. I own Roku. Love Roku. Up 7.39%, was the best performer in my portfolio. Peloton up 3.4%. Financials up 1.26%. XOM, ExxonMobil up 0.16%, and emerging markets were up 0.12%. Go figure. So again, it's almost at a point where you think like the hope is gone that, okay, we're not going to get a Santa rally, we're going to fall, and you're already looking at puts and it bounces. And then when you think Santa rally is coming, it falls. It's an absolute frustrating tape this week. Has been one of the most challenging ones I've seen in a while. But we've seen these before. I can't say that I've never seen this kind of tape. I've seen it. But it's frustrating to see as, you know, we're closing out the year. Now, OPEX being tomorrow, if you had a lot of shorts and a lot of short sellers already, they're more than likely going to cover their shorts tomorrow. The question is, what do we see tomorrow? I have seen some flow and some bullish calls on Apple, for example. So let's go ahead and real quick kind of change it up a little bit. Let's take a look at some unusual options activity. Again, these are activities on stocks that have higher than expected volume. Anything over 10,000 is usually pretty good for me. So let's look at that again. Apple right here, the 180 calls for this week, 336,000 vol. Tomorrow's 177.50 calls, 313,000 in vol. 175 calls in Apple for tomorrow. That's 252,000. The 180 calls for next week, which I'm in, 172,000. Puts did excellent. 170 puts made 342%. If you opened, has 130,000 vol. 105,000 for the 180, 250 calls for this week. So again, a lot of volume on Apple calls. Now again, you can't really differentiate if those are calls being sold or calls being bought. Again, it's just moving. So again, that's just how much like the demand is. 421 calls for this week. You could see 98,000. So again, looking at it all, I don't see tons of puts, but I do see tons of calls. So it could be a lot of buy the dippers coming, a lot of forward flow I see here. That's been coming up a lot of Apple flow. I see some Bank of America flow. Again, I see Bank of America all the time. AMC 24 puts, that was for today. That was red today, down 35%. Mind you, not all puts worked in a down market. ASHR, I don't know what that is. That was for January. You have the 42 calls and the 36.5 puts, possibly a strangle. Facebook 342.50 calls for this week, had 23K in vol. You could see the again the 180s for January 22nd of 21st of next year. That had 23,000 in vol. So a lot of Apple being piled in. Citibank today, the 60 calls for January 21st. Those gaining vol, that was 21,000. You don't see a lot of Citibank calls on the sheet for the most part. Amazon 3,500 calls for this week. Look at that, down 89%, but again had 22,000 in vol. So a lot of traders out there, in a sense, either catching the dip, trying to catch the dip, trying to catch the falling knife in a sense, or there's a lot of call writers that are trying to get people to buy their contracts. It's an example. So that's what I'm seeing right now. Did we hit a point of capitulation? Capitulation meaning like no hope, that's it, it's game over, March 2020 sort of thing. No, I don't see that. If you really see it, we're only at about 1.5 points from all-time highs on the S&P. Nasdaq being a little different. If we take a look at the Nasdaq, I can look at that together. So let's keep things in context. I'm going to go to percentage calculator, and then we'll go from the high 167.67. Now this is futures. Now we're at 158.65. And we're down 5% from all-time highs on Nasdaq futures, right? Now, is that the worst thing in the world? No, not really. I mean, a full-blown bear market would be 20. So imagine this times 4 times that. So if we take a look at E-mini futures, and again, I went ahead and did the actual setup in terms of the Fibonacci levels. So we tapped we settled right above the 50-day retracement of the Fed's move yesterday, that big boost. So we could have retraced all the way down to 46.02. We didn't. We got to around half of that. So in a sense, all we did was really lose half of the gains that we've had from the Fed yesterday. Keep that in mind as you move forward. So if we go and take a look here on E-mini futures, 47.43 being the all-time high. Right now we're at 46.61. We are down 1.7% from all-time highs. So I'll give yourself a little perspective while you're looking at red portfolio if you're red today. Assuming you have an index fund, you're probably red today. That's a lot to speak of. My apologies. Let's go to the questions. Hey, Carlos. This is Daniel. Hey, Carlos. I entered the January 1st, 2022 SPY 80s, 480, 485, and 490 calls today. How do you see SPY in the upcoming month? Wow. I don't know what time you bought it, but that's pretty ballsy. That's a very, very bullish call. Speaking in sense of statistics, if you are up 20% by the end of October, the next 4 months are usually bullish. That's not every time, but usually. I don't hate that call. I would have just bought SPY instead. And I would reduce two of those positions, keep one, and I would use that money just to buy SPY if that's the case. That would have been easier. 3 different ones, that's a lot of risk in my opinion. IBB still has room to run. Now this is the IBB Biotech ETF. Now again, you could see kind of a downward trend here on the hourly. We'll take a look at the daily together. Again, if you're still bullish on vaccines and more need of medical stuff like that, medical vaccines or different diseases or anything like that, then yes, you would want to stay bullish here. If anything, I would probably wait for around 145 to buy some. Again, if you're buying IBB, it's not very growthy. You're pretty much just getting it for the yield and kind of a consistent here. Keep in mind, guys, we started in January, rolling 52 weeks, it's down maybe 0.4% from where we started for the beginning of the year. All that move and nothing this year, so imagine that. So again, IBB, again, if you're around 142, maybe worth a shot. But again, if you're doing it just for the yield. What time is OPEX tomorrow? OPEX is not just it's not a time occurrence. It's the whole day. Again, it's the whole day that the options contracts and index contracts and futures contracts expire tomorrow by 4 p.m. So again, I expect volatility from 3 to 4 p.m. Just sitting out and watching the market make a move like this week is just crazy. Yeah, absolutely, Jason. And again, you don't have to trade every day. I think that a lot of people get that misconception. Even this week, we went relatively light because it was such a landmine. Keep in mind, Monday, AMD broke my support. If I would have held AMD and not closed it, I would have gained yesterday about 50, 60%. Enough to pull your hair out. That's just the reality. Caught Apple in the morning, thank God, before the fall. Caught QQQ, thank you, Kevin. Caught that. I'm still holding it. I didn't get a chance to close it. That's on me. But again, the members got it at least. So we got 2 today. Thank you. Thank you, God. Something. And it's been a rough one. I still have Facebook calls that were green today and it flipped. Microsoft this week was shitter. It was just ugly. It was just an ugly one. That's one of those, you're in football or you're in basketball and you get blown out by 20 points at home. It's just, you burn the tape and you move on. So again, Sancho rally possibly on pause. Who the hell knows what happens tomorrow? Do you think consumer defensives are still the play? CL, CAG? I like consumer defensives as a slice of your portfolio, absolutely. But again, you're only getting those for the yield. So again, I like Costco. I like Walmart. I like those. I like Procter & Gamble. Procter & Gamble is a little pricey. I think Colgate-Palmolive is probably a better bet. But again, those will be just, again, defensive. You're holding those for the yield. You're not going to get a ton of growth, which would suck in a bull market. Again, that's what I expect for the next couple of years. Defensives are gonna underperform. They're outperforming now, but they're in the broader sense. As we looked in terms of the market, if I bring up here, you can see the groups. Again, relatively speaking, let's do a 1-year relative performance. Defensives were the low mark, second lowest on the board, and the 1-year relative. So you only gained 5%. You're still underperforming the broader stock market by 15%. If you had energy, if you had technology, if you had financials, if you had real estate, you outperformed. So again, in a bull market, yes, defenses are going to lag a little bit. But when shit hits the fan, you're going to be happy you have some. So at least that. But will they do pretty well? Yeah, it depends how bad COVID gets in terms of variants, Delta, Omicron, and such. Let's see. I bought the midway turnaround at 2 p.m. I got them calls the implied move of 21st, 22, 24. Okay, cool. If you're with, I just think it's a little too much risk, Daniel. But again, you're the king of your portfolio. I'm pretty sure what you do is you feel is best, and I think you know what you're doing, obviously, since you're here with us. So again, I wish you the best luck. I think you'll get them. It's just the risk is a little too rich for me. For that, I would close 2, leave 1, and just buy SPY instead. I actually bought some SPY G today on weakness. I buy every Thursday, not because, any particular reason. I just buy it every week, personally. Thoughts on Schwab for long-term hold? I think Schwab is an excellent company to hold long-term. Out of all the financials, if I go ahead and go to the maps, again, Charles Schwab is a brokerage firm, obviously the capital markets. I like Goldman Sachs a little more. That's just me. I like JPM a lot more in terms of those two were my shining stars in my portfolio too this week, today. I really like Goldman Sachs. I really like JPM. I think Citibank is fine. I think Bank of America is fine. I think Schwab is fine. I like Morgan Stanley. I don't like Wells Fargo just for the simple reason I just don't like that bank. Not for any particular reason. And I hate to invest in a company that I just don't like. That's just one of those things I'm not going to do. I'm not a cigarette smoker anymore. I used to be a pack a day. So I wouldn't want to buy a Philip Morris personally. If they pay a great yield, then it makes sense maybe. But again, I don't smoke anymore. I'm more of a vapor person. So unless Philip Morris makes vape juice, then that's a whole different story. All Altria, personally. What about WFC? Again, WFC in a sense of the company, it's not a terrible company. It's a good company. I just don't like the way they treat customers. I've read some horror stories regarding Wells Fargo. I saw this documentary on Wells Fargo, something called Dirty Money on Netflix. It's a really good documentary. And how they just screwed people over with overdraft fees. I would hate to want to support that kind of company. Now, granted, they could have changed. Granted, has JP Morgan screwed people over? Has Goldman Sachs screwed people over? Yes. So I can't say I'm extremely consistent with that theory. But Wells Fargo, I'm just not a huge fan of. I've traded Wells Fargo many times. But to own it, I want to own something I like. And I don't want to own Wells Fargo. Sue me for it. Thoughts on Lucid going into next week? That's Matthew asking. Let's go to Lucid. Oops, I don't want that. Let's go to charts. Lucid going to next week. Right off the 50-day moving average on the daily. Could be interesting. But I'm waiting for a break of 42.83. You can start seeing a little bit of a flag here. If it does break above 42.83, I would start taking a look at the 45 calls on Lucid. It looks pretty good. Let's see if we get a bounce on high beta. You're welcome, Daniel. Still bullish on THCX? Yes, I had a question on that. Again, I am very pro-cannabis. Absolutely. If it breaks $8, I will be adding again. I have no problem owning the basket that is THCX. You could see it's been absolutely brutal. Again, this is marijuana stocks, cannabis stocks, it happens. So at $8, I'll buy some more. If it goes to 0, which it won't, that's fine. Again, it's not a huge slice of my portfolio. I just like it. So again, cannabis stocks to me, I prefer it. Now, again, the saying goes, always buy what you consume. Hey, who knows? I partake a little some here and there. Why not? Take a little bit of the edge off. I mean, if we have some that do the same, cool. But I do blaze, definitely. So I do love me some THCX. If I consume the product, I want to be an investor in it. So again, that's just me, how I do things. Let's see, Qualcomm 190 calls for next week. Let's take a look at it. I'm on the weekly here. Let's go in the hourly on Qualcomm. Nice bounce after hours, as you can see. Right at 179, you're taking a look at the 190s. Let's break above 184, maybe 185 first. I would wait for that. Again, it moved just with the market for the most part. I think Qualcomm is an excellent stock. It's actually a nominee because I haven't finalized it, as a top 10 stock of 2022. So keep that in your back pocket. Qualcomm may be on the list, and I do love me some Qualcomm. I think Qualcomm is fine, but wait for 185 to break. Way I dislike Wells Fargo as well. I don't blame you, my brother belligerent. Tesla's asking, what do you think about the movement in NVIDIA today? One of my worst performers, but again, it's so up this year. This stock has been absolutely on a tear. You could see how it's been since last year. What was that, 134, guys? This thing has effectively doubled, in a sense, more than doubled. I mean, yes, we were at 346, but NVIDIA, you're going to get some profit taking. I think it's an excellent company to own long term. If it hits 268, 64, I am buying with both hands. Definitely buying some more NVIDIA. So again, I think it's an excellent company with AMD. Again, Nasdaq fell. NVIDIA is a big part of it. Nature of the beast. Nature of the beast. You're welcome, Matthew. Thoughts on Tesla? Split rumors seem dead. Yeah, you know what? I read some of those rumors. I really didn't put much emphasis on it. I've heard rumors about Amazon too. Nothing came out. $900, I think Tesla's a buy. If that does hit, cool. But yeah, I think Tesla's fine. But again, look how much it's done this year. It's done very well. We remember we were guys at what at around 618 at the beginning of the year. We hit as low as 548. We hit as high as 1200, and now we're at 900. So again, if you're a Tesla investor, you're still up nicely for the year. For the most part, you were basically at 604. Now you're at 900 for a really solid gain. I think people kind of lose perspective on these intraday moves. Of course, watching videos like this kind of put things in context. But if you start looking at a CNBC, a Bloomberg, and you read these Wall Street Journal headlines, you would have thought the world ended. Granted, we're only down about, how much are we down on the S&P? 1.7%? That's not a panic. March 2020, guys, February 2020 was panic. We had a 38% drawdown from highs. So whatever you saw today on the S&P, multiply that by 38. That's what we are at. That's where we were. And that was pretty panicky. And if you were interested, I did a video the day we started buying stocks in March. It's on our YouTube channel. I don't have a link to it. Let me go ahead and find it so you guys can see. I think it was one of our most viewed videos that I had. Let me see if I can find it here. I really want to get you that video, so it gives a little perspective. Let's see here. Bear with me, guys. I know you guys have questions. Just give me a second. I'll find it for you guys. I think it was a live. Let me see if I can find it. Views. Let's see. Live trading session. Investment town hall. That was in 2021. Markets going crazy. I remember that. Let me go ahead and get you a shareable link. That was the investment webinar for 2020 when things went to shit. So I'm going to go ahead and send that to you. I don't have the exact link on it. So this is the link from the town hall we had and how I explained how everything was happening with COVID. This was back in March. So just watch that at your leisure and see if you like it. Let's see. Chiefs or Chargers today? Okay, so they suspended sports betting in Florida. The Seminole Indians, again, there was this lawsuit. Seminole Indians had to pause, which was okay because, I mean, I didn't hit many bets. I just do crazy parlays with the wife. I'm talking like $10, guys. Nothing crazy. Make it interesting. I'm going to go with the Chargers today. I think Chargers win it today. Call me crazy, but I'll roll with the Chargers today. I really don't care who wins. I'm a Cowboys fan, but I think the Chargers win tonight. I'll go with the Chargers. You're welcome, Dante. Gotta avoid the headlines. You're welcome. Thank you, Andrew. What are your thoughts on quad witching? Now, again, quad witching, again, guys, this happens every quarter. So, again, you just get a bump up in terms of volatility. It doesn't mean bullish or bearish one way or another. It just means volatility. So, what does that mean? What could happen? There's a couple of scenarios here. Let's go over the two scenarios. One, which is what I'm going to go leaning 75% chance on. I'm not a fortune teller. All we do here with trading, guys, is manage probabilities. Think of it as poker. If you have a 2-7 offsuit, you're more than likely going to fold that shit hand, right? You're not going to play that unless you're a hell of a bluffer. Fine. But if you got 2 aces, 2 kings, the Cowboys, you got some pocket rockets, you got some ladies, you're going to play that. Again, you could still lose even with the best hand in the hole. It happens. It's kind of the same thing with trading, is that even the setup can be great, you could still lose at the end of the day. It's just the name of the game. I was telling the members about this story the other day. It was a really good one. It's a kind of an anecdotal story I read online. So there was this really, really big time gambler, and he always lost. And he bet on the ponies, the horses. So he goes to the horse races, and he loses every time. I'm talking about every time he loses. So he goes to the horse track, and one of the jockeys tells him all the other horses are scratched. There's only one horse left. I think it was like the number 4 horse or something like that. It doesn't matter what number it was. So the gambler puts his house up, in a sense, to bet on this horse. There's only one horse left on the track. He puts everything on the horse. Hey, guaranteed win, right? Again, he's the only one racing, one horse. The gates open. He starts riding. He starts riding or trotting or running. I guess the horses run. Horses start running. Guess what happens? Alone on the track, he hops over the fence and leaves the track. Doesn't finish the race. The gambler loses. So even sure things aren't so sure. Remember that stuff. It's a very funny story. I always think about that one when it comes to a sure thing, because there's no such thing. Only sure thing is death and taxes. Ain't that the truth? So here's scenario number 1. The move that we had today, I was expecting this tomorrow. the move we had on Wednesday, I was expecting on Tuesday. So bullish moves. So with that being said, could possibly be that we have so many people on the short side, very bearish, very pessimistic on the market, whether inflation, Omicron, you name it, any kind of excuse, and they're short now. Now tomorrow, with the end of the day, end of the quarter, maybe, just maybe, those individuals get stopped out. That's what we call a short squeeze. This is what happened yesterday, where if a short gets squeezed, meaning the stock goes higher, they have to buy because they're short. Just like somebody who bought a stock and needs to close their long position, they need to sell, which again turns into waves of selling. This waves of selling. What happened today, and the day before, and the 2 days before, and today, and Wednesday was waves of buying. So again, scenario A, we get a massive short squeeze, we get that volume with OPEX, a lot of shorts cover, and we soar. Definitely plausible. I would say that's a 75% chance. The other 25% chance is that the people who throw in the towel are the bulls, and they said, it's over, I'm selling, and we start breaking down below 4,600, which is the lows of this week. We break that, we're gonna start testing 4,540 and 4,500. That would be big. Now, would that be the worst thing in the world? No, that'd probably get us to around 5% down for the year. That would pretty much hurt any kind of Santa rally for all-time highs. But 45.94 is your 50-day moving average, and we've talked about that so much on the daily on S&P futures. Again, that 50-day moving average has been that kind of guide to kind of get us higher for the most part. Is it perfect? No. But again, that 50-day has kind of giving us the track of where we want to be in terms of the S&P. So those are really my two scenarios for tomorrow. Is it enough to want to go all in on something? Remember the horse. That's all I say. Remember the horse. Yes, you're welcome, Matthew. Yeah, cheers. I hope you guys remember that story. It's a really funny one about the horse. This dumb stuff. Either way, thank you, Daniel, No Cap Trading, Jason, Jose, Belligerent, Matthew Fisher, Jose, Wesley, Dante, Tessa, Andrew, Simon, and Jason for all your questions. I really do appreciate it. Again, please hit that like button for me. It really helps the algorithms, of course, in terms of YouTube. We're trying to get to 10,000 subscribers. Cross your fingers. Maybe one day we'll get there. Right now we are at 8,226 subscribers. So thank you so much, guys, for subscribing. Thank you for joining me today on the Aftermarket Recap. Crazy day, but again, like I always say, it's not a death sentence. It's another day, and a reminder, guys, this is really hard to do every day. It's not easy. So whenever you think it's easy, it's not. It's not. And you just get used to it. You roll with the punches, and you go from there. I'm glad to help in any way I can. Keep things into context. I'll be here answering your questions, of course, daily. We'll see you tomorrow morning, 9 a.m. Eastern Standard Time for our morning note. And, of course, 5 p.m. for the Aftermarket Recap. Be regular time. Again, guys, anything else you need, go ahead and turn on notifications so you don't miss any videos. Take a look at that link I sent you on the chat. That was from March 2020, what we were talking about. Some really good stuff. I hope you like it. It's one of our best viewed videos. I hope you enjoyed. If anyone likes to see it, go ahead and share it. Really do appreciate it. As always, hit the like button on that one too. Have a good one, guys. I'm off to see Spider-Man. Cheers.